Mortgage Talk is on, where you receive good information for your mortgage needs, such as mortgage programs and foreclosure programs to help get you out of foreclosure. Stay tuned and hear what's coming your way.
Things are going wrong. My life's uncertain. There's no place I'd rather be. Standing here beside you, my man. Your love always comforts me. So thanks for being a friend. Yeah. Over and over again. I can never repay. Love is sending my way, my way.
And thank you for being here, and thank you for joining me on Mortgage Talk. How are you doing out there, everyone? Wow, man, it's been a while since we have been here with you on Mortgage Talk. I like, we've been a little busy, but I like to come back with you with some good information that we have our experience in, and information that we have did some research on just as well. So so it takes a little time. I mean, I enjoy being here. I enjoy doing the show with you. I do another podcast show, connected with other wonderful people that I do for like a Club Saturday Night. I do that, and then of course, matter of fact, that's on tonight on Speaker.com, and that's on at 10:30 at Club Saturday Night. That's where we play some good music there too. So I'm involved in that. I'm involved in my own business just as well. And like many of you, we have our ups, we have our downs, and so we are moving good. Things are good out here. Jobs are opening up. So many. I mean, I've never, ever, ever in my adult life have seen so many jobs open. When I came into the market to look for a job, President Jimmy Carter was in office. And that was back in the 1976 when he was trying to come up with this pandemic, the swine flu type deal, the same deal they did now here. If you want to look at that, go to Mike Wallace on 60 Minutes. It's going to open up. It's going to open up a whole lot of interesting things for you there. I just want to share that with you. Go to Mike Wallace is on YouTube. 60 Minutes to swine flu. Formulate your own opinion, but I recall it back then, and so the point I was making was that even back then there was not a lot of jobs. I mean, jobs is there, but it's almost like, oh, you heard about this job? You got to go over here, or word of mouth, or hook up to get in. But today, there are so many out there, and these are good jobs, good paying jobs, by the way. So they're out there, and they're out there in your neck of the woods too. If they're not, relocate, because they're out there for you. Today's topic, I want to talk about becoming your own bank. It's really interesting because it's going to help you in your mortgage buying needs. I'm going to tell you about a mortgage program that's out there too, because I mix all that in there. They all come together, but basically they all are part of each other. So again, it's nothing in left field that's not here. So they're all in one particular field. But I'm going to talk to you about a program out there too, just as well, and it's going to fit right into what I'm talking about, to becoming your own bank. You have heard of this before, and there are other versions of it. Some companies, small companies, are offering it to you and through your own means of doing it. I'm not trying to bounce on them, but this is something that has been around for years. Okay, this is nothing new. This is not something that that has never been heard of. For some of us, it may be different. It's something that we haven't heard of. So I thought that by coming to you today, from a experience level, coming to you today from my company, MCC Financial Service, a licensed and bonded company, licensed in my great state of Illinois, and also licensed in the Commonwealth of Virginia, and licensed in Michigan. uh, they don't just throw a license at you. You have to earn them, and you have to be licensed and bonded and all of that. And I am, as you know, and I'm gonna tell you, I'm I am a licensed insurance agent, and also I'm a real estate investor, and I've been one of not so much as an investor, but as a broker, a real estate broker, and I've been that for over 20 years. Man, I tell you, man, long time, long time, long time. Been in so much. That's why I know a lot about it. Still learning. It's still an evolution factor of learning, and so I try to share some of the knowledge that I've done and experience, and look at programs that maybe I don't know that much about the programs at this time, but I'll do some research so I can share it with you. Being in the business, I'm able to grasp a little bit better understanding, and I can relate that to you as I've done so with my clients too. So I want to talk to you about becoming your own bank, because that is so real. It's the real deal. But I don't want you to get confused and get tied up with um, um, independent uh, companies that have their own version of this. I'm going to say this again. This has been around for years. As a black man, very few of us knew about it during the earlier stages, especially the generation like my dad. Okay. And then the generation like my grandfather, they didn't know anything about this, or if they heard of it, it was so complicated to get involved because white folks had the control of it. Okay. And they didn't even offer or led information that they can get involved in. They even, to prove that they didn't want them to get involved with it, they steered them to a different area. They even steered them through policy buying. Back in my grandfather days, they steered them from buying a whole life policy into a term policy, so the policy can end early and they can come back and they can get them to sign up again, or they even die before the policy. Or after the policy expires, because they just give them like a 10-year policy and a 15-year term policy. Term, because term was a cheaper policy, and so they were offering them that type of policy back in them times. So it's steering them away from even basic insurance. So they're gonna steer them away from learning how to become your own bank, because that frees up communities, that frees up villages, that freezes up cities, that freezes up individuals that can become their own bank. And they don't want them to know about it. Now, fast forward to today's time. In today's time, there are so many money makers out here that wants to make money, and so they come up with their own version of how to become your own bank. Some of you are already in the program, but don't even know that you're in the program. Some of you are already in the program, but don't know how to develop the program for you. Okay. Hopefully we can put all that and wind all that together today. Okay. When you see these people and they do the advertising, like with anyone, including me just as well, you have to have a disclaimer. You have to put a disclaimer um, on your website, or a disclaimer in what you're saying. As you speaking, the disclaimer comes out. So the disclaimer on a lot of them reads, and that all times and interest saving examples, wealth building examples, and rates of return on this are strictly hypothetical. Individual times and interest savings amount and wealth building possibilities are subject to individual qualifications. Individual qualification requires no financial advice or recommendation have been made as part of this particular program. Then it goes on, et cetera, et cetera, et cetera. What we talk about is governed by the federal government. What we talk about is governed by local and state government department agency. What we talk about, we do and will give you a illustration. In the illustration, we are allowed to stay within the percentage sector that particular level, and I'm gonna call it level for right now, that particular level have earned over from past years or last year, and even what is growth billing for the current. We can show you potential growth, but we can guarantee you one thing, that the money invested and the accumulating interest, you'll never lose it. Interesting. Hold tight now. I'm not done yet. Interesting. Some of you may have caught on a little bit, but I'm not done yet. How to become your own bank. Think about that for a moment. Do you want to become your own bank? What are some of the advantages of becoming your own bank? Just give it a minute. Just think about it as I go on. You can take our current currency, which is about to change, by the way. And I'm not talking about this stuff that they're talking about now. Is it the whole currency? That's not that crypto. I'm not talking about that. Give ideas of examples of this, and I'm gonna give you some ideas. I just mentally put a note to myself. Currency is definitely going to change. It's already in motion to change. We thought that a world pandemic may not exist during my lifetime, and I'm 63 years old. I thought probably it would exist after I'm dead and gone, but it happened. They are changing the currency. The paper currency is no longer going to become the currency for us or the future. Already, the test of it has already been implemented, and we're doing it now. Our kids are very smart when it comes down to computer and how to get information and build websites and et cetera on computer. We do it now by starting off with from an individual credit card company with a photocopy as we go to the stores and we pay for it off our phones or whatever device that we have. We can pay for it that way. We go online. We operate online even more. A lot of us are very skeptical about being online, especially some that's in my generation and the generation before me. Oh my God, they were very, very skeptical about it, because you got to understand, that's the generation that key punching. Do you remember the old machine, key punching machine? That's the generation that the key punching machine was introduced, and I was part of that too. Just in generation that they was introduced in. That's the generation where they had a computer language called COBOL, okay, that was introduced. That's the generation also, and I'm part of that generation. I mean, I got the outskirt as that generation was moving on. Mine was coming in, and I got this during the high school stage, that where you type in from a word processing machine, which was a big, huge machine, and it printed out cards. Computer cards, and you take those computer cards and you feed it into the computer, and the computer will print you out a huge computer sheet of what you want, of the program and the directive that you wanted that program to follow. Okay, print you out. That's the old school way. Now, of course, it's springboard very quickly into a word processing machine, and then springboard from a word processing machine that's old, which really killed the typewriter. You really want to know the truth. Even now, if you can find a typewriter somewhere, get it. I mean, for me, I can't wait to find one. I want to get one just to have one, because certain things I like to type on anyway. But that's just me. I mean, we all have our own different hang-ups and stuff, but that's what that is. The changing of this currency is happening. What is going to be called, I don't know. But the introduction of it is going to happen. They're going to introduce it to you. It's going to happen. Paper money is going to go away. And what you have in the bank now, the value in the bank will not be equal to the new currency coming in. You're going to still get some value on it, but it will not be equal to the new currency coming in. Becoming your own bank and what you have in there doesn't decrease your value. It doesn't decrease the value when the new currency comes in. You will equal up to whatever the value was then, you equal to it now, becoming your own bank. Becoming your own bank will give you a peace of mind, because now you give you time to work on things such as your credit scoring. If your credit scoring is low, you don't have to worry about not qualifying. We put our money in a traditional bank, and the traditional bank accepts our money but pay us 0.1% in interest. Nothing. Monthly, 0.1%. But loan the money out at 6%, 8%, 16%, and make tons of money on it. We make these local bankers rich. Because traditionally, from my generation and my father's generation, my grandfather's generation, and his father's generation, banks were the safest place to put your money in, even though bank robbers was robbing the banks left and right. Banks were the safest place to put your money in, even though you had embezzlers embezzling in the bank. Banks were the safest place to put your money in, because it was what? FDIC insured. But we know that FDIC insured only insure up to 200. I mean, what was it, $100,000? $100,000? But it's the safest place to put your money in. So you put anything over that, you're only gonna get back 100,000. So you put 300,000 into that bank, you're only gonna get back 100,000. If they insure up to 200,000, if you put your money, you put $500,000 in there, and the bank folds and closes up or sell out, whatever, you're only gonna get back what FDIC insured was going to insure it for. What if I have 100,000 in 10 banks? And that's what some people did, just to try to spread their money out there to give some kind of safety net. Okay, cool. Okay, now you're covered. But isn't it wonderful to have your own bank and you don't have to worry about that? Now, having your own bank don't apply to those that are poor, struggling people. You can have your own bank too, baby. What are you talking about? Hold tight. Hold tight. Middle class that's slowly trying to be destroyed can have their own bank too. Everyday working people having their own bank. Yeah. The wealthy people have been doing it for years. Years. Corporations have been doing it for years. They even use it to pay their top executive bonuses. Mm-hmm. What do you think the lottery is paid from? Cities are doing it, big and small. Villages are doing it, big and small. Independent corporations, as I mentioned earlier, are doing it. And people that have the knowledge of understanding is doing it. And some of you are already in it but don't know it. And you're not doing it. And you're struggling. Being your own bank, you can pull yourself out of foreclosure. Being your own bank would allow you to purchase real estate to increase your wealth or your cash flow or your first home or your condo. Being your own bank give you a peace of mind, but being your own bank, you watch your money earn money. Interesting. You can borrow from your own self. You don't even have to pay back. But let me ask you this question. Hold on. And I gotta put this in there. If you borrow money from any other financial source, don't you gotta pay it back? So why would you borrow money from yourself? Because you're a bank and don't pay yourself back. Think about that. But it's an optional point for you. You can decide whether that you or not are ready to become your own bank. Some of you are afraid. And you ask the question, why should I? I can't answer that. Only you can answer that one. Do you think that this is a con game? Just to get you a little money? It's not. Just told you. It's been around for years. It's not. Those out there that are trying to emulate it is not telling you that. What if I tell you, as I mentioned earlier, that a person that's struggling, and I had them in my course that I'm gonna talk about in just a bit, and say, man, I'm living from paycheck to paycheck. I got no money, man. I got bills coming in left and right. I got a couple kids over here, man. I got no money, dude. I can't do any of this stuff. I don't know what you're talking about. I can't even save money at home. But yet I can show you how you can do it, and told them easy how you can do it. What about that change that you have dingling in your pocket when you walk through the door? Why don't you take some of that change or that whole change and put it into a jar? Each and every time you come in, whether it's every day or once a week, add to that jar that change you got. Don't tell me what you can't do. Go through the pillowcases not the pillowcases, but go through the couch covers and get the change that don't fall out of your pocket, friends' pockets, everybody else's pockets that don't sit on your couch. Go through that. Pull out what you pull out in there. Go through your pans before you wash them and take the little nickels and dimes and quarters that you got and put that in the jar. If you can specify and just save pennies, you can specify and just save dimes, you can specify and just save quarters, you can specify and just save $50 because some of them are vanishing because a lot of people are saving them, but you can still do that. You can specify in saving $1. But I'm talking to those who says that they got no money to do anything. So I'm talking to those that can't even save $1. You can save your change. Watch what happens in a month time. Watch what happens in 2 months time. How much change you don't save. Watch how you have to get another jar. What about using your sock and pouring that money into your sock and then now use the same jar? And in 6 months or a year, take it into the bank and cash that change in for dollars. Don't tell me that you can't save. Just tell me you don't know how to save. Don't tell me that you can't save. Tell me that the mental block that of the stress of bills coming in, $100, $50, $80, $25, I can barely get money for a cigar. I can barely buy money for a beer. So therefore, I can't save. But yet I was able to show those wonderful, beautiful people on how they can save if you just try. Because you see, when you start the boat, there you go. when you take that old rusted wheel and you start to turn it and you're working off the rust on it, it's gonna start moving, baby. And when it starts moving and you start seeing what you're doing, you are going to be glad. It's going to change you. It's going to change. I'm telling you. It's going to be a growth factor. It's going to be a growth factor. It can happen. So becoming your own bank, being poor, you can do that. Oh, I'm not. That's not becoming your own bank. That's a small portion of it. But that just to get the rust off the wheels that you can save, so you can grow to become your own bank. That's what that was all about. When you purchase real estate today, it all comes together. Follow me. I'm not going to lose you. When you purchase real estate today, there's a program, thank you, Joe Biden, to help new home buyers to become home buyers. It's a grant program. It's a program that's offered through banks, some of the largest banks like Chase Bank, Wells Fargo, even some credit unions offer these programs. It's a grant program that they offer you have a choice to choose between 3 different of the programs to choose from, A, B, and C. One of the programs I have the pleasure to teach at Salem Baptist Church of Chicago. At the time, I was the real estate mortgage ministry leader there, under a wonderful lady under the Economic Empowerment Ministry led by Miss Benita Parker. The program was called Consumer Credit and Debt. But hold on. Stop. I don't want to go too fast. The grant program will give you $5,000 if you were to complete those courses. If you choose Consumer Credit and Debt, better known as Credit Smart, it has about 16 modules. Okay. That's what their chapters are called, modules. If you complete those modules and you complete it, the results automatically is there. Your loan officer can go in and can get those results, and they will release $5,000 to you to be used toward closing costs with the bank. It's not going to be put in your hands so you can go out there and spend and buy something else. No, that's not what the program is all about. Money is only to be used for closing costs. Okay. Sometimes you come up with 0 closing costs. There. Plus, get a tax credit back. Ooh, I can walk away with some money too. Woo! Yes. Chase will give you $500 toward closing costs. Now that's Chase. Some credit unions may give you $1,000. Some other banks, I don't know what Wells Fargo gives you. Okay. But the grant program, you have to choose one of those 3 educational courses that's going to teach you about budgeting, teach you how to be to understand interest, so you don't get trapped into those 700 interest places. You know what I'm talking about, those title loan places. Stay away from that stuff. That's old mafia ripped me off, and that's an old black hole. And you know what a black hole is? It sucks you in. Very few, very few people get out of a black hole. Stay away from the black hole. It teaches you that. Show you how you can drown in that with the interest that they charge. Teaches you how to manage and budget and manage your property, how to improve value on your property, how the mortgage industry works, how to pay your loan off earlier. You see, some people think that if I double up on my mortgage payment, I can pay my loan off. Well, slowly. What do you mean, Rick? I've heard that before. If your mortgage is $500 a month and you pay another $500 a month, in my opinion, and I'm gonna explain to you why I say that, you're walking in the door backwards. Stop. My mortgage payment is $500, right? What is my principal? My principal, and that is $150. I'm just using this example for just keep all even numbers. So the other is what? Is interest. And if you have escrow, then the other will be part of escrow. Let's say you had escrow with this one. Okay, so 150 out of 500 is 350. Let's say that 100 is escrow out of the 350. So 250 is interest. So if I double up on the payment, the full payment, I'm not only paying 150 for the principal, but I just gave $2 extra $50 to the interest. Now there's something called an interest loan. Some of your doctors do it. I had a wonderful doctor that did it, okay, at Jackson Park Hospital. He did it. He can afford it. The guy makes over $500,000. So he can just pay down the interest of that loan. Then he could convert it over and then start paying down the principal. So every payment that he makes will now apply toward the principal. That's the interest-only loan. You don't have that. So doubling up upon the payment is really, you're walking in the door backwards with this. You are accomplishing what you want to do, but you just threw extra money at the banker. And he's sitting back saying, "Thank you. Keep on doubling. Of course you can do that." Why didn't you double up on the principal? So when you double up on your payments, it means that you double up on the principal. So I got an extra $500 to pay. I'm going to apply that toward principal / principal only, and a certified notational letter sent to them, letting them know so they don't be confused. I didn't know what you want me to do with this, so we put it in a non-interest bearing account. We had no idea that that's what you wanted to do. You have to give directive to your mortgage company. I don't care who they are. Okay? I'm putting $500. All $500 is going toward the principal. You understand what I'm saying? Now you will pay your loan off faster because mathematics never lie. If you tear down the principal, the interests fall. Just remember that. Got to move on. So this grant program, when you go through consumer credit and debt, it brings in and finish up modules. As I said, this is a course that is offered by, well, created by the Historical Black Colleges and Yale University. It was issued to the local communities and issued to Rainbow Push, 1,001 churches connected. Salem Baptist Church being a part of Rainbow Push, we obtained that. Now, this was introduced by Freddie Mac. We won an award off that. Teaching the programs, the real estate ministry in our community, people came in to learn the program. It taught you how to clean up your own credit. Taught you how to understand the credit laws, because when you understand the credit laws, then you can clean up your credit, because you find a violation in the laws. Okay, don't let it overwhelming you. It's not an overwhelming situation. If you follow the course and the modules within the course, it's shorting a lot of it. Because if you sit there and try to read all the credit laws, man, you'd be like, oh, what time is it? I've been on this thing for the last 15 hours. No, can't do it like that. Because it's going to specify and go into what matters to you today. What's the average? What matters? How is it reporting? Is it reporting correctly? Who is reporting? What time can a creditor call you? What does the law govern them on? Because if they found guilty, they can be fined up to $1,000 in fine. Your local state mimics the federal law. So if they violate federal law, they violate state law. So if you get a fine for $1,000 for each one of the federal laws that they violated, and they violated 3, and in most cases they are Fair Credit Reporting Act, Fair Credit Collecting Act, okay? If they violated any one of these laws in there, then they violate the state law. If they're found guilty on the federal, you can take that results to the state, and then now they might up paying $4,000 or $6,000 for violating the law. Okay, it's real. So this is how credit repairers repair credit. Okay, by getting them to change. They tell you that it can't be done. Every month every quarter they report on the magnetic tape to the credit bureau. I think with time now, I think it's changed now. I don't think it's magnetic anymore. It was in my time. I don't think it's back in the 80s and the 90s, but it can be changed, and it can be changed instantly. Under that, a lot of you there. But let me just say this: there is no such thing as lost data. Okay, every individual is assigned at least 3 credit bureaus by each bureau. So if they were to move what is right fully yours, and they'll move it to the second reporting bureau, to your second file. That's the word I'm looking for. What's in your first file stays in your first file, but it's just not reported. It just goes into hiding or goes into storage. And now activate the second file and putting everything that's yours on that second file. There's no such thing as lost data. Now, commit a crime, a federal crime, and let the FBI get involved, and you'll find that out. And you don't want to find out if I'm right or wrong on that, because then they're going to activate that first file and the second file and tell you, well, you had all these here, okay? So just to let you know. All right, so there's no such thing as lost. Oh, so they deleted off the bureau. They never deleted off the bureau. They just activate an alternative credit file and move your information over to that. Each bureau provides each individual with 3 files, just to let you know that. In being your own bank, allow you to leave money or help your children to become their own bankers. I set my kids up that way, and now I'm gonna set them up the old traditional way. Why are you doing it? You said they're gonna become their own bank. Yes, I did. I did it already. But I want them to see, because sometimes, these kids that you gotta take them by the hand. Come here. Look, see? Because they look at you like you're from another planet when you're talking to them. So I'm gonna set them up that way so they can have it. Because in certain areas and certain credit gathering companies, they want to know, do you have stability? And having stability is part of having a checking and a savings. But I want them to know, even though you're using that tool in that area, that's not where you store your money at. You put some money there to use, but you store your money in your own bank. Now I'm going to talk about developing that bank. I'm going to talk to you about developing that bank. Some of you have paid homes. Whether you paid for it yourself, I'm 55 and I'm paid for it. I'm 60 and I'm paid for my home. God bless you. Good luck. It all depends on when you start your home. Some of us have started with home buyers at age 18 or age 21. Some of us became home buyers at age 30. Okay, and now we are 50. House is not paid for yet. Some of us was home buyers at age 35 and 38. So our homes are not quite paid for yet. Okay. Right now, they're tearing doors down trying to get you to refinance your home. So this applies to the refinancer people too. Not only if your house is paid for, and it's up to you, and I know that's a scary factor too for you, for what I'm about to tell you, because it had been something that I had to think on myself pretty heavily if I wanted to do something like that. But now that I know what I know from my training, I can also, and then seeing it work, not just in my time, but saw it work when I wasn't even in the business. Wasn't even in the business. And I said, oh, that's how they did it. I had no idea. But to understand it now made me say, hey, you need to get one for yourself. And I said, yeah, you're right. I do. And did. Hey, let's get another one. Yeah, you're right. I am. And I will. But I had to set it up for my children. And some of you have already done it and or don't know that you can do it to set up for your kids. And because some of you don't even think about setting up anything for yourself. And you know who you are. I'm telling you, to store my money traditionally into a bank that only going to pay me 0.1% is not a winning factor for me. And it may not be a winning factor for you. But this is a guarantee. Protected by the, it is protected. Oh, I'm about to open up the door and I'm about to tell you about it, but it is protected. But I got to give you the ins and outs of it first. So if I pay for my house, it's already paid for. Now I go borrow money on my house. Either I put another 30-year mortgage on it, either I borrow the full amount of the value, because some of us can qualify for 100%. Some of us will qualify for 90% or 85% of the value. But I take that money and I put that money in my bank. I set up where every month on mortgage payment, either I can take from that bank, set it up by taking a yearly amount, set it to the side in one of those checking accounts, and allowing the mortgage company or bank to debit that account each and every month. Now, the money that I just put in, I put $270,000 into this account. I took $10,000 out to put into a checking account. So the bank can pull from it. So I got my mortgage paid up for the first year. I'm working each and every day, so I can constantly add whatever I want to add to that account. So at the end of the year, I still got money there going over into next year. Or I can set a plan that where the money that I add into that regular checking account, I've put another 6 months in there after putting 1 year in there. But in my bank still holds $270,000, even though I borrowed $10,000. The $270,000 is still there. Now, I may have to pay back to my bank at an interest of 3% or 4% or whatever the interest that they set. I may have to pay that back. I can choose to pay it back, or I choose not to pay it back, or I can choose when I'm going to pay it back. The choice is up to you. You have the control. But the interest earning on the money in your bank is $270,000, not $260,000. But I use the money for here. Stop. I refinance for a lower rate. I said I'm gonna pull some cash out, but I'm only gonna pull about $40,000 out. I'm gonna take $10,000. I'm gonna use it for home improvement because I need to improve my property. I got some stuff wrong. But I'm gonna take the other 30,000. I'm gonna put it in the bank. Here's what I would have done. I'd have took the 40,000 out and put the 40,000 in my bank. I would turn around and borrow from my bank the 10,000 that I need for home improvement that would improve my property value. In my bank, I still have 40,000 there. So the interest will accumulate on the 40,000. Notice the two mindsets. Notice the traditional mindset. I'm gonna take 40,000, keep 10, and put 30 in, as opposed to the bank mindset. I'm gonna take my 40 and put my 40 in, then borrow from myself, and I'll pay it back. But I can pay it back when and at my discretion of paying it back. But I'm gonna pay it back. The commitment is pay it back. You don't have to, but the commitment is to pay it back. Train yourself, and that you can do. Now, I can take vacations. I can pay for weddings. I can help my brother when he needs to help. I can literally take the money that I know that somebody needs to borrow. This company or this small business needs $10,000 for improvement, and I can get a contract, and I can have him or her to sign the contract, and I'm gonna check and see, do they have collateral? They sign a contract that they're gonna make these payments back to me, and the money goes back to my bank. Now my money still stays in that bank, but I just took 10,000 of my 40 and loan it to this dog grooming company, so they can use the money to grow their business, and they pay me back. Did you know that some smaller companies do that, by the way, and they loan money back? And you wonder, where do they get this money from, the loan? They became their own bank. So you can branch out in the contents of becoming your own bank, depending upon what you have in your own bank. I'm living from paycheck to paycheck. I start the program. You say it is protected. Yes, it is. You say that the money that I incur in it from the interest, I'll never lose it. That is true. You say that it's governed by local and state and federal. Yes, it is. So I'm protected. Yes, you are. I can borrow from it whenever I want to. Yes, you can. Am I capped in borrowing? Yes, I am. You can liquidate it. They have suggestions. So, if you got 40,000, why would you take it down to 38? But can you? Sure you can. Can I close it out and take all the money out? Yeah, you can do that, because that's what will happen if you do that. What if I have 40,000 and I want to take it down to 39? Can I do that? Yes. Not quite recommended, but yeah, you can do that. Oh, okay. Because that's my account that is accumulating value based off the interest that is based off the stock market, right? And if the market falls, you lose no accumulating interest nor invested funds that you put in. And you'll wind up getting a 0.250 credit. What? Yeah, even if the market falls. Keep in mind, it mimics the market. Your money is never in the market. But your growth potential continues to grow. So your account continues to keep an accumulating value. Your bank, the bank of John Johnson, the bank of Susan Wilson, the bank of Robert T. Jensen. That's your bank. It continues to accumulate. Your children, you can set up for your children, and you can add money into their bank just as well. Your kids can wind up having 100,000 and more when they become age 21. Some questions came in, and I want to make an attempt to answer some of these questions. What if my home is paid for, Rick, but I can't afford any low money programs? Well, you don't need no money to start off the program. Okay, you don't. There's a minimal monthly payment that you're making, but the program has a death benefit with it, a guaranteed death benefit. The face value you can choose and make it whatever you want to make it. So you can cover your death and still leave money to your spouse, grandmother, mother, whoever. And you still have your bank still accumulating and funds in there that your beneficiary could take over. And if trained right, your beneficiary can continue that process. If not, your beneficiary will close your bank and will wind up having a lot of money to spend. So you don't need a lot of money to start. Now, again, if you have money to start, it's some, excuse me, some companies will require you to have $10,000 to start. It all depends on the level that you choose. There's about 4 different levels there. Because if you start with the 10,000, you will immediately see what you have in the bank and the growth of the dollars from the interest, whether the interest is at 3.25%, 4%, 2.90. Once again, still higher than any interest the bank is giving you on your $40,000 that you got in the bank right now at 0.1%. And when you see the small growth just from the 10,000 that you can afford to spare out there, when you see that growth, it's going to make you sit back and go, what the hell I have my money over here for? It's not making me money. You'll get a chance to break that old tradition training, and you'll take your money and put it in your bank. And the bank that's giving you 0.1% will only be the bank that you leave little nickels and dimes and quarters in to spend whenever you run out of low money and you want to put 2, 3 in your pocket. You can go there to get, because you don't care no more. In other words, you don't care if it's a checking account or a savings account, because you'll no longer need the savings account. The savings account will become obsolete because you have your bank. You don't need their savings account anymore. So I can move my $11,000 or my $1,100, take it out of there. I can put that in my bank that's paying me 3.25% interest. I can take that and put it in my bank that's paying me 4.25% interest. I can take it and put it in my bank that's paying me 8.75% in interest. I can watch my money grow. Safe. They can come up with new currency all they want to. My money is never going to deplete its value or lose the accumulating interest. My bank, my accumulating account is not going to do that. Now, for everybody is different. You know, like one shoe ain't gonna fit everybody. Everybody is different. So what I mean by that is that I got a little money. I can only I can't put nothing in there. Okay. Well, from the contribution that you will be putting in, a percentage of that will go towards your bank. So you will get accumulation in that. When you get your bonus on your job and you get that $200-300 bonus, remember the golden rules now. If you got $300 in bonus, pay self first, $100. Don't overpay self. Take the $2 and put in your bank because you're paying for your bank. Okay? But what did I say about that old traditional mindset? What did I say about that mindset? You got to break that mindset. You're going to pay yourself first because that's what you have to do. If you don't, self will steal from you. You take your $300 bonus and you put it into your bank. You're paying yourself. Now you borrow $100 from yourself to do whatever you want to do. So the interest of accumulation will be on the $300, not the $2 that you put in. And you're breaking that mindset. I got my $3, I'm gonna keep one myself, I'm gonna put $2 over here. You gotta break that mindset. Because if you don't break that mindset, then when that 3 turns to 5, you're never gonna break that mind. When that 3 turns to 10, you're never gonna break that mindset. And then each time that you go up for what it breaks, you're gonna take more and more and more and more and more for stuff now, and be putting less into your bank. You can't do that. You want to see growth potential happen, that's what you have to do. Young lady said here, well, here's what a gentleman said to me in his text, because I posted that out there, by the way, before I did the show. I'm 63 years old and retired. Now I work a part-time job. I get Social Security. I have a term life insurance policy at $10K. It's good for the next 10 years. And I have a little money that I can put into my bank, as you say. And that amount, my extra money, is only $110. Can I become my own bank? Keep it real, Rick. Yes, you can. Yes, you can. You put $110, $75, $25, whatever you want to do, you can become your own bank. So yes, you can do that. That is true. You can do that. As far as the term policy, unless you know you got some serious health issues, then you kind of estimate, well, I may live the next 10 years, I may not. I'm 63, and I'll if God is willing, thinking the great I am for all that He's done for me, I don't want to check out of here in another 10 years, okay? And at age 63, if you like term, which is nothing wrong with term, because term now is no longer just a death benefit policy. It also has benefit factors for you too, just as well. And at your age, you can get the maximum of a 20-year term policy. That means that you're 63. If you live past 83, then the policy will end. But today's term policy that you can get, especially the one that I offer, you can convert it over into a whole life in your last year, okay? And qualify. So you don't have to worry about I'm 83, you know how much it's going to be for an 83-year-old? You won't pay no high premium in doing that either. Just some thought that I want to give you on that, okay? Becoming your own bank. And I want you to keep that in mind. You can call me at 708-572-7855. Now, the reason why that I'm saying and not throwing it all out there to you is because you have to choose which level is going to work for you. It is a protection for you. And yes, some of you may have guessed, it is a protection policy for you. So we need to sit down, whether on Zoom, WebEx, or live and in person, and to go over which one is going to work for you and tailor to your financial need. And then you can begin by investing into you. You invest into everything else. Why not invest into you? Why not become your own bank? Why not watch your own money grow? Why not move your money from that losing 401k that are over and growing 3 million people wish like hell they never got involved with it? Even the creator of the 401k says this is the worst thing that it has turned out to be. It was never designed this way. You have no control. You have to wait to the next entry opening enrollment to change your investment. Now, in your banking, your money can be invested into the S&P 500. It can be invested into index if you have chosen that level. It can be invested into the Russell 2000 and the Russell 500, the European market. You can diversify by choosing what percentage you may want in each one of those markets to determine your interest. If you chose the index level, if you chose just the interest level, the higher interest level, you can choose. Higher interest means that this one is offering you 6.25 or 5.75. It has dropped down to 4 before, but it's going to average in we are projecting that's going to average in this particular area here, maybe 6.25 or 5.90 or 8.25. You can choose in the level in which the interest is at 2.75. It can go as high as 4%. The average level has been between 3.25, 3.10, 3.5, 2.990, 2.75. You can choose. Not choose the interest rate, but choose that level so you understand the fluctuation of the rate within that level. Again, higher than any bank can offer you 0.1%. What if I have a Roth? You can move your money from your losing Roth, but I'm not going to beat up Roth. Roth is a good for a lot of people, but Roth is just not meeting the need right now for people. So you can move your money from the Roth there. If I have an annuity is great. Why would you want to move? Annuity is great. Even some of those that offer, that try to mimic being your own bank, some of them are using annuity for that. And yes, you can use annuity to become your own bank too, just as well. Okay, nothing wrong with that. So to not keep you mystified, every individual situation is different. Every individual can do more or less than what others can. But the growth potential is guaranteed, and you see the growth potential there. So if I'm poor, my growth potential is not going to be as great as John, who has a little bit more that he could invest into his bank. It's not going to be good as Karen, who's able to take her paid home, put a mortgage on it, and put the money in the bank and set 1 year to the side and let it pay while she's making her money each and every day from her job, and can take the extra that she has and invest it in the bank, where she was putting it in the traditional bank. She now can put it in her bank because she just took the money from a paid home. She decided that, hey, you know what? I'm not going to take the full value. The full value is at $300,000. I'm just going to put $150,000 mortgage on my property, even though it's paid for. And I'm going to take that $150,000 and I'm going to put it in the bank. I'm going to take $12,000 because that's what I pay a year total in mortgage, and I'm going to put that into a checking account, allowing the mortgage company or the bank to debit that account each and every month. But I still have in my personal bank $150,000 still in that bank. I just took 12 and just put it there into the traditional checking bank. I don't have to make a mortgage payment out of my check that I'm getting. I get $1,000 a week or every 2 weeks, whichever is which. I don't have to take that money. But I'm going to take a percentage of that money and I'm going to put that into the traditional checking anyway. I may put $300 in there every pay period. I just may add $300 there. Just put it there. I can pay off my other bills because I have budget, because I went and took Credit Smart, and I learned how to budget more and better. So what I used to take from there in a run of a month and put about $900 into the traditional bank, I can take that $900 extra money and put that into my bank on top of my $150,000. I felt comfortable not maxing out my real estate property, so I only took half. It's still going to grow 5% each year. It's still going to grow in value, but I just felt comfortable that way. Don't know why, but I understand cautiousness. I do understand, but don't know why. Everything there's a risk factors in a lot of different things, but one thing about this here, the risk factors is zero. So if I got a zero risk factor, why am I risk factoring? Take the max, put it in there. So instead of me getting $150,000, I'm going to get the whole $300,000. I'm going to take the $300,000 and put it in my bank. Then I'm going to borrow from my bank 1 year to pay on that mortgage. That means every time I get my paycheck, I got to make a mortgage payment because the money's already there. So, but I'm going to take out of my budget. I'm going to percentage-wise. I'm going to take $300 or $400, and I'm going to put into this traditional checking account that I've already put money in there that my mortgage company debits my mortgage from. I normally save about $1,000 or $500 or $750 a month. I'm gonna take that and I'm gonna put that into my bank. And if I don't save a damn thing, then I really need to reevaluate me and get me together so I can budget. And how do I do that when I have not traditionally done it all this long time and don't know how to do it? Well, then you need to take up Consumer Credit and Debt, better known as Credit Smart, offered by Freddie Mac. And you take that. And you take that course and you learn from it. Yes, you can go directly to them to get it. And you take that course and you can learn from it. You can go to Rainbow Push and ask them. And they'll get you the book. I'm sure somebody down there still have access to Credit Smart. And you can get it. It's free. It don't cost you nothing. You can get it. You can even download it from Freddie Mac. Go to their website, type in Credit Smart, and you can download it. Now you can start getting yourself in gear to understand how to build a budget but you got to be dedicated and you got to want to do it. And you'll be able to do that and set a budget. Now you can start savings, and now you may be able to take 500 out of your $1,000 a week and put over there into your private bank. After you have put a mortgage on your real estate property, maybe you refinance your real estate property and only got $25,000 out, but you got about $7,000 in repair damage that you know you need to take care of. You got a fence you need to do. You know you need to take care of these things. Okay. I got tuck pointing and things of that nature. I need to take care of these things. And, you know, I got a couple holes in a couple of pipes. Plumber's guy came in and said he's gonna charge me about $3,200 for it. I gotta pay these things. So I'm gonna refinance for that purpose. Instead of refinancing just to blow the money and spend the money, you refinance the money and you take the $25,000 and you put it into where? Your bank. Now you've already determined how much you need to cover the repairs. Now you borrow from your bank what you need. Now you can cover the repairs. Meanwhile, you still got $25,000 in your bank, even though you took 12 out, but you got $25,000 still accumulating interest in your bank. What a peace of mind that you have. You also have it guaranteed. You have a death benefit that's guaranteed too. Something were to happen to you, you're covered. Don't tell me about your term policy job, because a lot of you don't even know that the term policy job, it does not pay out until after 30 days, until they see that there's no garnishment coming in on there, then they pay out. Most funeral directors will work with you on that until you get the check. Meanwhile, your loved one don't have their homecoming. They done been in the ground for 2, 3, 4 weeks before the insurance company. Before the funeral director get paid because of your policy at work, or their policy at work, not yours, but their policy at work, your loved one's policy at work that passed away. So learn from them. You don't want. So if you got a term policy, which is term policy, on your job, you may want to rethink. Okay, you can get a private term policy if you choose to do so, or whole life. Whole life comes with so many benefits. So many benefits. Well, that's what I want to talk to you about, becoming your own bank. And not try to bombard you with make believe, or bombard you with lack of information by giving you little information. Everybody is different with anything, but you are protected, and you can continue to be protected. Want a private consultation with me on that? 708-572-7855. 708-572-7855. MCC Financial Service, an Illinois licensed insurance agency, licensed in the good Commonwealth of Virginia and licensed in Michigan. So you can become your own bank, and you don't have to become your own bank from these imitators. But you can become your own bank through the regular, traditional way of becoming your own bank. Isn't that something? You just have to choose the right one that's going to work for you, the right policy that's going to work for you. That's it. Now you got it. Now you know what I'm talking about. And you're going to be so surprised when you see how well it's going to work for you and why so many people and companies do it. Did you not know that that small companies do it too? Become their own bank and were able to borrow money from themselves to expand their business, to improve on their business. A young lady purchased a Domino. a Domino pizza place. And she worked at Domino pizza place for over a year. And it still hurts. But over a year, she accumulated enough money that she felt, her own objective goal, that she can put into her own bank. And so someone introduced her to becoming her own bank, and she said, that's a great idea. So she took the money that she had in the traditional bank account that was giving her 0.1% and put it into her own bank. She decided that I want another Domino franchise, and she purchased another one. All she did was just borrow the money from her own bank. And she borrowed it. And she wanted the index level, and the index level, you have to start that with $10,000, period. There's no 1,000, 2,000, or anything like that. Those are the other levels that you can start with. But with the index, you have to start with 10,000. And she started with more than 10,000. She was able to put 50,000 there, and she put it in there. But then she didn't just put it in there and left it in there. She took the extra money that she was putting in her traditional bank that was giving her 0.1%, and she put that into her own bank. So when time for her to get the Domino, I keep saying Dominex, because Dominex is dead and gone. When time for her to get the Domino second franchise, she was able to qualify for a second franchise and was able to utilize the funds that she needed to get the second franchise. And she's growing and growing and happy and happy. And she's only 26 years old. Wow. Man, can you imagine the knowledge that I know now? If I only knew that at age 26, how wealthy I would be now. So to be blessed by the best at a younger age, to accomplish what she have accomplished, is a plus factor. And God bless her soul, because she is moving toward wealth. Man, by the time she's 32 years old, she's gonna be financially ready, and probably will own several Dominex franchises and be looking at other franchises to do, or looking at other investments to go. Changing of the way from the bottom can now rise to the top, the way that the Bible says. It's not going to happen overnight and miraculously. This is the era of information. This is the age of Aquarius. As the Fifth Dimension song back in the 60s, 66, they sung Age of Aquarius. And they told you that age when the moon collides with Mars and Venus moves into this shape, to let you know what age that you're in. We're in that age of Aquarius. And in the age of Aquarius is the age of information. And in the age of information, what was once hidden will no longer be hidden anymore. So anything you want to know, you can learn and know it and can grow with it. So you see, the great I am, don't change that. That wasn't man. That was the great I am. We're in the age of Aquarius. Nothing is hidden anymore. All the Mason signeries and everything else is now exposed. People know what it is. The Shriners, all that. People know what it is. Nothing is hidden anymore. I told you about the greatest information center in the world, which is the what? Your local library. The greatest information center. So now it's up to you, your energy, your will, your desire, your goal. Break the tradition. It's not the right one. Become your own bank. Now you know how to start. For more information and to get you set up, call me 708 572-7855. MCC Financial Service and Insurance Agency, 708-572-7855. Call me. Let's set up an appointment. Let's talk. Let's see how we can put this together. I promise you one thing, as I did in the mortgage industry, I guarantee you that I will walk away with a happy client. Give me a call, 708-572-7855, 708-572-7855, 708-572-7855. MCC Financial Service and Insurance Licensed and Bonded Agency. The real deal. The real deal. No company over here. Come over here. We're going to charge you a application fee. We're going to charge you a processing fee. We're going to charge you a exploration fee. Nope, not at all. Not at all. But you will be able to start, have protection for yourself, protection for your family, and set generational wealth for your family, for your children. That's something. You can even start your babies with low monthly payments as $11 and $25 and $30. And you can even contribute to their accumulation account, building that wealth for them. Your babies, your newborn baby, your babies. You can start now. 708-572-7855. Get started. Don't sit back and watch everybody do what they do. And don't get caught up. Come to the real deal. Go to the real deal. 708-572-7855. 708-572-7855. MCC Financial Service. Think about that right now. And think about what I'm telling you about Credit Smart for those that need to be able to establish a budget. And don't you dare, what was that last question? Because I was supposed to read all of the questions. What was that last question? Okay, I'm a single mother with 3 children, 10, 12, and 15. I work on a job, okay, for 16 years. I can't wait to get to retirement. No husband or boyfriend in need. I like that. How can I become my own bank without taking money out of my bank account? Okay. When you become your own bank and you see the interest that you're going to earn being in your own bank, and you see whatever the monthly payments that you're making and the percentage going towards your own bank, and you see the interest of what's going in there, you're going to look back at this bank and say, I'm getting 0.1% from this bank. What the hell I have my money over here for? And you're going to take your money out of the traditional banker's bank, and you're going to put your money into your own bank. I guarantee you that. Without no pressure, no calls, no letters. I'm not going to call you. And I guarantee you, you'll call me and you'll say, hey, Rick, guess what I just did today? What did you do? I just closed that savings account that I have. Oh, okay. Why you do that for? Well, because I moved my money into my bank. And I'm putting money into my bank. I have money directly deposited into my bank. Wow. 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 I can do that. Now, is there a cutoff? Depends on what level you're on. Every level has a different amount. But yes, there is a cutoff to it because you don't want to convert that over into an investment banking system. Okay? You basically want to keep that policy what it is and govern and protect it under the insurance industry. Don't want to convert it over into an investment. So you get all the benefit protection that comes with it and comes from it. You don't lose anything. Now you can watch your growth. And some of you, you need to start making these changes. And if you're not sure of how to do it, call me, 708-572-7855. Yeah, just give me a call. Hey, Rick, how can I do this? I got this over here. Okay, is that making my own money? Is that my traditional bank? Yes, it is. Okay, well, I don't have a clue on what to do. Okay, here, let me share that with you. And I'm gladly to share the information with you. You don't charge to. What am I charge you for? The only thing I ask you to do is if somebody come to you and they're in the same situation that you're in, that you share the same information with them. Don't stick your chest out and know like that you better. Share it with them too. Pass it on. That's how we're going to build our Black community, and that's how we're going to be financially free in our community. We have to work together. Becoming your own bank. That can happen. It's real. It's been happening for years. It's been happening for centuries. This ain't nothing new. But it's new to some of us because we were locked in the old traditional mindset. And you got to get out of that traditional mindset. You know, I got to hover everything. You see, the old folks used to take their money and bury it in the backyard, bury it on their farmland, or put it under their mattress, or put it under their bed in the bed floors. They used to do that because they didn't trust the white man's bank. So, can you trust the bank system? Can you look at the bank system yourself and say, if I continue to keep my money in this bank system, I'm going to be wealthy? Then I ask you this question. Name me one person, go online, go to the greatest information center in the world of anybody who put their money in a savings account and wind up retiring wealthy, wind up retiring so comfortable. Tell me, give me somebody. And don't tell me, well, my Aunt Jane, she put $160,000 in the bank, and so when she ready to retire, she retired, and it was like $167,000 in there, and so she was able to do that. You're kidding me, right? Yeah. Okay. So that bank system works, man. It really works. Do you know what the interest was that she earned on that $165,000? Ma, I don't know. They tried to get her to put it into some other kind of account. They said that she probably can get I don't know, some maybe like something like 1.2%, or I think lady said that she get 2.1%. But Auntie like, I don't know if she understand that. Becoming your own bank will be easy for you to understand. Becoming your own bank, you'll know what the interest accumulation and starting off is. Becoming your own bank, you can monitor, what the market does and the interest that is given to you based off the market. Remember, it mimics the market. None of your money is invested in the market. So all your accumulations that you make off your money is protected. Is guaranteed. The interest occurred, the investment that you put in is guaranteed to stay there. You're not going to lose it at all. Now, that's a sure thing. Not many investments, if you want to call it that, but not many financial institutions can offer you that. Let me just say it that way. It's guaranteed. Okay? 708-572-7855, MCC Financial Service. That's what it's all about. And we can help you get started to becoming your own bank. You can purchase your real estate property. You can buy more real estate property. You can finance your investment real estate property. And you can protect yourself with your real estate property just as well in case something were to happen that you fall into foreclosure. None of us predicted the pandemic, but how many of us own real estate and then the people, our tenants, couldn't pay the mortgage because their jobs folded immediately, instantly. Where are they going to stay? You can't put them out. You know, I mean, what kind of heart do you have? Why would you? But the burden is on you now. You still got to make that mortgage payment. And if you didn't budget properly and budget correctly and have a little nest egg stuff in that 0.1% interest account that you got called a savings, if you didn't have that there, then this was going to be a tough time for you. The government wasn't offering anything to assist. It became there after Joe Biden got in office. It wasn't under Donald Trump. So what did you have? Now that is depleted. Now you got to start all over again. But if you were your own bank, if you were your own bank, you could have went over and got money from your own bank and kept your existing there and the level that you're on still there, and you could move ahead because you were your own bank. See how being your own bank can work out well for you, and how you must believe in you to put the money you have from 401k, the money you have from the Roth, the money you have already stuffed in the 0.1% savings into your own bank. And now watch it grow. Watch it cause its cousins and nieces and nephews. Watch it grow. Become your own bank. Can't say it no better than that. Give me a call. Let's do a private consultation. Let's put it together for you. And then you could become a testimony, not only at church, but you can become a testimony. Want to invite me out to your church to speak and talk? I'm more than happy to. Give me a call, 708-572-7855, 708-572-7855. Ask for me, Rick Montgomery. More than happy to come out to speak. Okay? God bless you guys so much. Thank you so much. And thank you for listening to Mortgage Talk. I do appreciate you all so much. And you listen, and I appreciate it. Thank you for listening. Thank you for being here. And thank you for joining me here. I'll be back again. When? Okay, that's a good question. Next Saturday. I'll be back for sure next Saturday because I want to talk to you about the grant programs that are out here that can help you. I also want to talk to you about some foreclosure programs too, because it's got a lot of different ones in there that can help you if you're in foreclosure. You know, the banks are opening and they are starting to foreclose, and the court system is opening, and they're taking people's home left and right. So you want to be able to protect your home. Okay, I want to talk to you about that. And I'm going to talk to you about that next week, next Saturday. We're going to go into some of the foreclosure programs. The show will kick off at 1 o'clock. And I'm going to talk to you about that. And then I'm going to talk, but before we kick into that, I want to talk about the buying of real estate through the grant program that Chase and Wells Fargo and some of the other banks are offering you. That is grant money, $5,000 given to you from the federal government. Even some of them are even giving you what they call their own personal grant money, meaning that you don't have to pay it back. Grant money means I got to pay back nothing. So you put the word grant on it, free! I got to pay it back. And so they offer you that, so you can take advantage of that. I'm also going to go into and I've done this before, and talking to you about a purchase program too, with the USDA, United States Department of Agriculture. Yeah, I didn't know that. Even if I have a challenge credit, I can still qualify for the USDA loan. Of course, the property that I choose has to be in the USDA district area. Okay. And it's easy to find out by going to the website and typing in the zip code, and it'll tell you if you're in that territorial range area. Okay. So I'm going to talk about the USDA a little bit more about that. Let you know how you can qualify for that, especially my young people, especially for my first-time home buyers. And, I got challenge credit. I work for McDonald's. Then I work for Walmart part-time. I got 2 part-time jobs. I don't know how you think I can qualify. What's your time frame on the job? Time frame on job shows some form of point of stability. And so, yes, you can. Short time on those jobs are not. You're going to need some tag team help. Let's keep it real. Okay. So with that, we're going to talk next Saturday about some of those programs and to help get you started right here on Mortgage Talk. I'm Rick Montgomery, and I thank you so much for you tuning in. I'll see you next week on Mortgage Talk. Until then, become your own bank. God bless you.
Thank you for listening to Mortgage Talk. I hope this information is something that you can use for your mortgage needs. Remember to tune in next week at the same time for more Mortgage Talk. God bless you.
That you've done for me. I want to thank you for